Hey everybody, today is April 24th, 2020, Friday. The market has been closed, and let's take a look at the market this week. So this week, we are essentially not doing much, right? We had a pretty much just a 1 day large decline from the 2800, 2875 to all the way down to 2700. This decline is really not that much compared to the historical volatility we've been having since the February 20th, since the larger decline. You can see that this entire move for 2 days was only the maximum of 5%. If you can get, if you can enter at the exact top to the exact bottom, which is not very likely. So the maximum you can capture on the short side is only about 4%. 4% is a very, very small value in this market. So if you look at, previously we had these kind of 12%, 13% down days in a single day. 4% in 2 days is a very small move. So where is this market going to go? By looking at this chart, we can't have a short bias here. I'm going to repeat myself. We can't have a short bias here because the market right now is still very strong. It's above the 5-day moving average, above all these moving average. I'm not showing the moving average here because everything is above all these short-term moving averages. The market, it doesn't take a genius to see that the trend is up. The overall trend is up. Okay, you can draw a very simple trend line to see the trend is up. Don't fool yourself to think that you are smart enough to be able to short at the top. Don't fool yourself that you can actually pick a top and it's going to go down right from there. I guarantee you that's not going to happen. If you look at this, we have obviously a downtrend. We have broke that downtrend right here. We're up now. So don't try to short it. The market basically consolidates around this area since when? Since the So the market has been consolidating since April 7th. So April 7th to, which is beginning of this month. Today is 21st. Sorry, today is 26th. So for the entire month, if you bought on the 7th, if you have been holding for the entire month as a long position holder, or if you're holding the short for the entire month, you would have made almost nothing, right? You would have been made it maybe just 4 or 5% if you're just holding through this. So far we've been consolidating horizontally, and that's a very bullish sign in the uptrend market. The general trend is up, and we're consolidating horizontally. We have not been breaking down to the downside. This is telling me that, we've been holding above the support level since the beginning of this month. So this is a very bullish sign. It's not a very bullish sign, but this should give you a bullish bias. You should have a long bias just by looking at the price action. And we are consolidating through time. That's a fact. So fact number one, we are consolidating through time. Fact number one, we are in uptrend. Okay, multi-day time frame uptrend. So that is an uptrend we should definitely respect. We're in an uptrend. When we're in an uptrend, we should always trade in the direction of a primary trend. You don't want to short this market. Look at this. Look at all these shorting opportunities. It's just a day. Sometimes only not even a day, and it's gonna run you over. So you don't want to short in this market because you have to have amazing timing to short and to not be stopped out. And so if you short at a wrong point, the market could just pull away from you and never come back. So you do not want to short. And for people who are playing options, obviously this month, if you're holding options, just by holding the option, you would have a lot of theta decay and time decay in your option, which is not very good. And so we've been consolidating for almost a month, since April 7th again. And so my So what's the next thing? So next thing, I'm looking at the market to continue consolidate further. So I would think the market would be zigzagging going forward, and we should ignore these kind of trend lines because the S&P never respected proper trend line. For example, I can draw a trend line anywhere, and in the uptrending market, and you can see that the trend line gets violated all the time. For example, here we had a downward move, and I'm going to draw a similar trend line like today, right? If I draw that right here, oh, a lot of bears going to say, oh my God, we're breaking the trend line, we're going downwards, we're going to go straight down. No, the trend line gets violated all the time in the index. So the trend line doesn't mean anything. It only shows that you are in an uptrend, okay? And you can see the market just continue going up, and you have to draw another trend line here, right? And then eventually that could be getting violated. You try to short it, break the trend line. You think it's going to break to the downside. Let me tell you that no, it's not going to break to the downside. You're going to get stopped out. So don't try to short this market. It could go for a long time until we see a clear sign of a long-term kind of a breakdown, right? You're not. So if you look at this. It has a huge major gap. Now you can see the short sale is absolutely in control, and you might want to enter when it breaks down from this point and set a stop right here. That's where you should enter short. You don't want to, just guess the top, guess the bottom just by looking at the trend line. When it's breaking trend line, you're trying to, pick the top. Like for example, right here. Oh, okay, maybe that's the top. Let me show here. No, maybe is that the top? No, is that the top? No. Okay, so that's the top. That's the top. It broke down. It broke down. It didn't really broke these kind of support level. Am I gonna short here? Well, maybe. Well, then I get stopped out right here. Then am I gonna short again? Okay, so maybe. Look, it's not gonna work for you if you thinking the market's gonna break again. In the situation we have. Remember, the stock market is not the economy. The stock market is driven by liquidity. It's driven by money. If you look at Venezuela's stock market, it has gone up like a few thousand%, okay? Because of money printing. You don't need the economy to do well for the stock market to go up. If you keep pumping in money, if you keep printing money, if you keep keeping interest rate negative, keeping interest rate zero, just wash the market with cash, the markets can continue to go up indefinitely, actually. So the market is not the economy. Keep that in mind. And right now, so what I'm looking for, obviously we should have a long bias at this level, but right now we're in a horizontal consolidation. We want to find a very good entry point. So the obvious entry point you probably thought was this week, where you should have enter some long position here when it was consolidating around this obvious resistance. And as someone who's been trading this market for years, I can tell you that the obvious resistance is not something that we should really just place our entire position on, because anything that's obvious can get violated. The market makers knows that these resistance level are obvious. They can see that as well. All the funds can see this as well. They're gonna run you over. They're gonna run your stock over. For example, if remember the whales, the smart money in the market, they don't want you to be along the ride with them, right? When they start buying the market's going to go up in a big way. They don't want you to join the ride with them. They want to kick you off the roller coaster. And this, if you look at this happens very often in the index. You can see that if we draw any resistance level, for example, here we have a resistance. They always get shaking out. There's always a few bars that's just going straight down and take out all the stops, and then the market pulls away from you. It happens very, very often in the index, in the SP 500. You can see that here we had obviously a very obvious resistance, It consolidates, comes up, consolidates again, comes up. We had a kind of a double top here. Then it broke down, just went through that resistance and tried to shake everyone out. Then the market just lifts and went away without you. So I'm looking for something like this, right? It's very common. We have obvious resistance here. The price consolidates, came up, consolidated, came up, attract some shorts. When it start breaking down, I'm pretty sure a lot of shorts, they thought this is going to be a lower low. They got attracted by the price. Now it came back up again. I'm pretty sure the shorts are not too happy who entered around this level. They either got stopped out or they are close to being stopped out. So next week I'm looking at something like this, right? If we can go up a little bit, then we break down and crash through the trend line. We need to penetrate through this trend line, then come back again, then consolidate around this area, then lift off. That's something I'm looking for. I want a wash and rinse action here to wash rinse all the stops. I want to see the market makers and the whales to run the stops over, then lift the market back up. So that's where we want to enter. That's probably this level we want to enter some of our positions. So that's what I'm looking for. Hey, if indeed the market is able to, but that's not gonna, this scenario might not happen, right? It could be just, if this just continue going up and take off without us, that's too bad, right? That's too bad. But would I be chasing here when it's breaking this this resistance, chasing here? I would not be, because it could consolidate this level, going up again and come back down. Because whenever there is when there's a rally without a proper wash and rinse, the rally is not very real. It could be easily broken down because it's not really, the participant in that rally is not strong hands, right? For example, here we had a resistance. You have to go down and wash and rinse to really attract the strong hands, shake out the weak hands for this rally to be material, to be a real rally, to be a very ferocious rally. So we need to shake peak out here and then rally up. That's something I'm looking for. In this kind of consolidation moves, we need a final shakeout. If we have a final shakeout, that would be a very bullish thing. We should go long. We should definitely stay on the long side and enjoy the ride. Another reason that I'm expecting this kind of shakeouts, because let me just remove all the lines here. We should think about the next resistance level from the profitability sort of thing. You can see that here we have a major resistance level. Even before we reach this point, we know that this is going to be a resistance. This level could be a resistance because that's where the market broke down. We had a circuit breaker from this point on, so we know there's a major selling pressure around this level. So we assuming we are back in time, we don't know what's going to happen in the future, we could put a resistance here. And you can see that the market did reach this level and react to that potential resistance zone. And this is a 21% rally, right? That's what the smart money want. The smart money wants, 20% profit margin with their money when they're going for the long side. And then we consolidate again, we rally again. The next resistance level is obviously this level, right? Just by looking at the historical price action, we know this is the percent of resistance, and we did reach that point. That's another 18% rally, right? So the smart money wants something like a 18% move, or more than 15% move in this market. If the resistance, the next huge resistance is really, really close, I don't think the market's going to move over there right away because the profit margin, the room for profit is just so small for these big money to take that risk. So I would expect the market to come down to a certain point to wash and rinse, so that the big money can enter at an even lower level than this, so that they can take advantage of the next rally to really meet their profit target. So you can see the next target, next obvious resistance, obviously here, right? Anybody can see that from the current price level. If they bought it, somewhere here, that's only a 13% move. That's not very a lot. That's not a lot, and because it's getting harder and harder to push the price all the way up here, because we're closer and closer to the all-time high. So if the price does come up to here, the most these big money can make is only 13%, which is very small. They probably want to make something like a 20%. I'm talking about long leverage products. So if we have a wash and rinse going down this level, then come back up again, we would be looking at something like a 17% to 18% move. That would be something more reasonable for these big money to have. That's also another potential reason for why I am expecting a wash and rinse in this market. And that's it. Thanks for watching.